Hey, what's up, guys? John here. Foreclosures are now up 34%.
Housing analysts are starting to see a foreclosure uptick again, and unfortunately, Las Vegas is at the tip of that financial spear.
Mortgage rates over 8% for the perfect credit score borrower.
Mortgage rates climbing for a fifth consecutive week.
8%. The 30-year fix has jumped 20 basis points. What that means for a person buying a $400,000 home with 20% down is they are now paying about $1,000 more a month today than they would have just 2 years ago.
If you have bad credit, it's over 9.1% for a 30-year fixed. On top of that, home builder sentiment just hit a 10-month low, and we're walking into a massive hurricane in the real estate market. I believe it's going to present a huge opportunity for smart and savvy real estate investors for 2024 and 2025 to make an absolute fortune as we see millions and millions of homes go into foreclosure, and we see a lot of commercial real estate investors and landlords lose everything. I'm going to break it down for you. I'm going to show you the facts of what's going on. Please hit the like button. YouTube will share this content to educate other people about what's really going on. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com by clicking the link in the description below this video. Take a look at this. So home builder sentiment drops to a 10-month low. 10-month low. Mortgage rates. This hits the highest in over 23 years, since 2000. 30-year fixed, 8%. 8%. Look at this. If you have, let's say, an 800 credit score, it's 8.26%. 8.26%. If you have, let's say, 640 to 659 credit score, 9.115%. How crazy is that? Because 18 months ago, that very buyer, that same buyer, could have gotten a 3.5 to 3.875% mortgage rate. Now it's over 9%. I believe what we're going to start to see nationwide is credit scores sink dramatically, even for higher credit score borrowers. And here's why. 43.5 million Americans had student loans due starting October 1st. And those student loans are going to start to become reported on those credit scores that cannot pay. This is January 1, right? So January 1, we're walking into the situation where you're going to see millions and millions and millions of Americans getting their credit scores destroyed because of what's going to happen here. And what do people generally do during the holiday season? They rely heavily on credit cards. They travel, they buy gifts, they put more and more and more debt and weight on their cards. So what are we going to start seeing? More late payments on credit cards. So I believe nationwide we're going to see credit scores sink, and we're going to see big problems for those that want to invest in real estate that have bad credit. So when we look at this situation, it's interesting how everything is working at the same exact time. Almost like the perfect real estate rug pull. Most perfect real estate rug pull in U.S. history. Since this country was founded, we're in right now. How crazy is that? Home prices on a $200,000 house. Where are you buying a $200,000 house? You can buy one in Camden, New Jersey. You can buy homes here for $150 to $200 grand. These homes, you're looking at over $2,000 a month with FHA, 3.5% down, with that 9.1% bad credit score, right? So if you have great credit, let's just call it 8.2%, will be conservative, right? It's $1,900, and then on a $500,000 purchase, FHA, $4,600. Who's going to be able to afford that? Nobody. So what I think is going to happen, since many people can't afford to buy these properties, you're going to start to see sellers chasing the buyers. As this labor market starts to deteriorate, inflation gets much, much worse, and many people are really becoming strapped on cash. They're going to start chasing a buyer. There's not any buyers out there. So what's going to happen? There's going to be more sellers than buyers, and supply and demand will determine price. That's what we're walking into right now. If you're looking at, for example, what's happening with rents in Florida, they've already decreased 4.15% year over year. In Miami, rents are already cooling more quickly. The same thing in California. Rents are sinking. Rents across the state have dropped 2% in a year, more than 4% in San Francisco Bay Area. You're starting to see this happen nationwide. But I predicted this actually a year ago, saying that I believe rents throughout America will fall in a big way, right? And this will equal big problems for landlords. This is what we're walking into now. And in that video, I was showing data, showing exactly what I thought was going to happen. And that's what we're walking into right now. Home construction, apartment construction is at a 50-year high. 50-year high. And they say, but to say multifamily construction's at a 50-year high is equally true and terribly misleading. Their argument is that, the population's, increase, so we need these homes because we're in a shortage. No, we're not in a shortage. That was the biggest scam that was sold to the American people over the last couple years. Look at this. Foreclosures up 34%. 34%, and now foreclosures are continuing to pick up. Now, this situation, this story with the housing shortage scam, is very fascinating. If you look at a location like Austin, Texas, where everyone wanted to move, there's a population of 967,000 people in Austin, 232,000 apartments. They're now bringing 120,000 units to market, increasing the rental market by 53% in 2024. What is this going to mean? Rents are going to continue to sink. This is what's happening in markets all over the country. So the big question is, people have these 2% mortgages, 3% mortgages, 4% mortgages. Everyone was talking about, hey, I'll never sell this property because, it's free money. I'm going to build equity. I'm going to build wealth here. Well, what's going to happen? What is going to happen when insurance continues to rocket up, right? Like this. Fire insurance in California will increase 20 to 30% starting next month. And you have it here. You could pay up to 35% more in Florida and California, these two other states, for home insurance. This is what's going to happen. The job market's going to fade away. Borrowing costs are going to continue to be much, much higher for longer. It's going to be harder to get access to liquidity. And people aren't going to be able to qualify because they're not going to have the income to support the loan. So what's going to happen? They're going to be in trouble, right? They're going to be in big trouble. It's already to the point now where 1 in 6 Americans, they can't pay their utility bills. That's how crazy this situation is. Right here, 1 in 6 homes are behind on their utility bills. So when you see these headlines of the housing market is rock solid, everything is going to be great. Look, the housing market is built around incomes. The housing market is built around the economy. If incomes are softening and we're starting to see more and more layoffs like this, mass layoffs could soon unravel the economy. Warren's expert 1 day ago. I just typed in job market, right? This is what's going to happen. The job market is going to get much, much worse as we have $2 trillion in commercial debt that has to get refinanced next year. We're going to see more layoffs. We're going to see inflation get much worse as this Israel-Hamas situation likely continues to escalate. The Russia-Ukraine situation continues to likely remain stubborn. What is that going to do? It's going to push up oil and energy prices, which is then going to get transferred onto policyholders of insurance, of car insurance and home insurance. Inflation is going to continue to run rampant. So people that have these 2, 3, 4% mortgages, it's a great thing if you have money, if you can actually weather the storm. But face it, most people can't. Most people are paycheck to paycheck. And so as the world gets more and more and more expensive, these people are going to start to really look at how they're spending money. And if their mortgage is, let's say, $3,000 a month, and they could rent in the same neighborhood for $1,800 or $2,000 and save $1,000 a month, believe it or not, a lot of people, if they're forced to do it, they will do it. They'll give the keys back to the bank or sell the property if they don't have equity, and they'll do that. I mean, look at the facts. In 2020 and 2021, 40% of all mortgages were taken out. 40% of all mortgages in America were taken out at the height of the market with record low interest rates. The average down payment was 6%. If they were to buy a property and sell the property the very next day, they would have lost money because a realtor is charging between 5 and 6%. Plus, you have transfer taxes and closing fees. What does this mean? It means the entire nation is essentially underwater, locked in to these mortgages, and they're in big trouble. So when you look at, landlords that are building all of these apartments thinking that, hey, rents are going to continue to increase 10, 15, 20% a year, and now they're seeing rents sink, and they're seeing borrowing costs go through the roof, and they have to refinance very soon, and insurance and taxes are rising, it's a problem for all these landlords. So what do I think is going to happen? I just follow the smart money. I look at what Blackstone's doing. I look at what KKR, private equity firm, what they're doing. I look at what Starwood Capital, what they're doing. Together, they control over 1 million homes in America. You look at what they're doing, and they're sitting on $5.3 trillion in cash. Blackstone just raised a $30 billion, $400 million real estate fund specializing in single-family homes, right? Single-family rentals. Why are they doing that if they thought the market was going to remain here? Well, because they think big problems are going to come and they're going to turn that $30 billion fund into a $100 billion fund when this market gets absolutely obliterated. And that's what we're walking into. 2024, 2025, we're going to watch so much wealth, so much money exchange hands. It's going to be crazy. Money's never lost, it's simply transferred. That's what's going to happen. It's very, very simple. It's very easy to see. Even MetLife Insurance said that institutional investors are going to go from owning 5% of all single-family homes in America to owning 40%. Or 40%. So they're going to increase their market share by 800% over the next 6 years. How are they going to do this? Well, because they need to really, really, really big opportunity, a lot of distress, and that's what they're planning on. What do you think? Do you think we're walking into a situation where we are going to start to see a lot of panic and a lot of problems in the housing market? If so, now is an incredible time to look at an online business or have a business that is going to be scalable. You're going to be able to make a lot of money. It's going to put you in a position to where you're going to be able to get access to funding and financing. You're going to be able to go around and pick up deals. That's what it's going to be about. You're not going to want to sit on a bunch of depreciating U.S. currency notes over the next 10 years as our currency continues to fall and walk into bigger problems. You're going to want to own hard, real assets. You're going to want real businesses that print money. You're going to want to position yourself for a world of uncertainty, because at the end of the day, money equals options, options equals wealth. What do you think about everything? Drop below, hit the like button. If you want to fix your credit, we'd love to help you. My company, greatcreditfast.com. That's greatcreditfast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to greatcreditfast.com, and I'll catch you guys in the next video.